What's up, guys? It's Rob here, and today we need to talk about the markets, as well as some scary new trends that I've been noticing regarding AMC, GameStop, Sundial, a ton of retail favorites. A lot of these stocks have been getting pushed down very harshly over the past couple of weeks, and really over the past couple of months. A lot of these stocks have been tanking, and there are a couple of reasons why that we need to talk about. So we're going to start off looking at AMC, right? Because this one is a retail favorite for sure. And it's recently been pushed down below $20, where a lot of people were hoping it would catch itself, where it would find some support. And it did. A couple of weeks ago, it actually bounced up to 30 off of that. And now it's back down below 20. So a lot of people are getting very scared. And this is following essentially a trend that's been going on for the past couple of months and is in no way an accident, right? This is exactly what the institutions and the hedge funds and the wealthy want retail to see and want retail to react to, right? So way back in 2020, a ton of new investors got into the markets, right? If you actually look at this report where they did a poll and figured out where all these new investors came from, right? They looked and saw that experienced investors, people who already had taxable accounts and opened a new account, 19% of new accounts that were opened were by experienced entrants, right? They already had an existing investment account. 43% of people decided just to maintain the existing accounts that they had. They didn't open a new one, but they did maintain the account that they had. And 38% of people who opened an account were actually completely new investors. They had never had an account before. So 38% of the market participants starting in 2020 were new investors, right? They had never invested before. They had no experience. And they did this probably because, the pandemic was causing a lockdown. They noticed stocks were surging in 2020 right after a big crash. They figured it was a good time to get in, and it certainly was if you were investing in these index funds. And even if you were investing in other stocks like AMC, right? Back in 2020 when this thing was around $5, that was a great time to be getting into it. Same for GameStop, Sundial, BBIG, PROG, anything pretty much. 2020 was a relatively good time. Well, maybe not PROG, but a lot of these stocks did incredibly well during the beginning of 2021 as these new retail investors had potentially gained some capital from making money in the overall markets, right? They probably started off in some of the safer stocks, the Microsofts, the Apples, the Googles, the Amazons, whatever it is, Tesla maybe. And as soon as they got some money under their belt, they decided to go on a rampage and really squeeze out some shorts, stick it to the hedge funds that were manipulating the markets. And they certainly did, right? They pumped up AMC. They pumped up GameStop. They pumped up Sundial in the beginning of 2021. They pumped up BBIG. PROG even benefited a little bit, right, towards the end of 2020 into 2021. A lot of these stocks started doing very well. AMC especially, right? Especially even later in the year, more towards June, it started doing incredibly well also. And hedge funds and institutions and the rich are not happy with this, right? They're not happy when everyone is opening up new investment accounts and retail is really getting into the markets because they don't actually want everyone to be investing, right? They want to hold most of the assets. They know that over the long term, the S&P is going to do pretty good. And they don't want everyone else, all the retail people, to have money in the markets as well, because then their relative wealth is much less significant, right? It doesn't actually matter to them what their overall number is, right? They don't care if they have $1 million or $1 billion, as long as they have 1,000,000 times more than you and more than me. Because that's how prices are determined, right? I mean, we're seeing that now that people have gotten some more money in the markets. We're actually seeing some inflation. People have a lot more money in their accounts, and thus goods are going to cost more. So the wealth of the hedge funds is actually less in comparison, right? Because now everything costs more. So they don't actually like that, and they want to scare people out of the markets, and that's exactly what we've seen them do over the past couple of months. In fact, if you look at the S&P, you might think that things are going well, but they certainly are not, right? We'll take a look at the S&P real quick, and you're looking at this chart from the past 2 years, and it looks like it's just been on the up and up and up. And that's actually a drastic misrepresentation of what's been going on, right? Because this is more heavily weighted towards the larger market cap stocks that the hedge funds have been hiding out in, like Microsoft, Apple, Google. That's what's been driving up the markets. And in fact, if you look at the Russells, which has more small market cap stocks in it, you can actually see that we've been relatively stagnant throughout the course of 2021. And if you look more recently at this fall that we've been through, since November to now, we've actually fallen about 16%. So a relatively scary drop. But that doesn't even explain the worst of it, right? Because there are still some fairly large market cap stocks in here. If you actually look, the NASDAQ is hiding the deeper pain with over 1/3 of stocks down 50% from their 52-week highs. So it's actually 36% of stocks in the NASDAQ index that are down at least 50% from their 52 weeks highs. And we're looking at this in stocks like AMC. Look at this thing. Down from its highs. If you actually figure out the percentage, it's down from around $72 to where it is at 18. It's down 75%. If you look at GameStop, down from $483 at its highs, down 78%. Sundial stock from around its $4 highs, it's down 87%. BBIG, its 52-week highs at 1250 is down, even though it's recently been through a pump, it's down 67%. PROG, if you look at its more recent pump, it's down 78%. So all of these stocks have been getting hurt in really bad ways, and it's exactly what institutions are hoping for, right? They're hoping that they'll scare retail out of the markets because they do not want retail investing. And the really scary thing is that it looks like a lot of it is working, right? Obviously, not all of this damage is shorts. A lot of people are deciding to get out of the markets. They're looking at this whole situation like it's a big scam. They want to get their cash, the greatly diminished cash that they have now, probably over the past couple of months. My guess is that a lot of retail investors are down fairly significantly. A lot of people, wait for these cycles where they notice there's a ton of hype. And a lot of people, if you look at the volume chart at the bottom down here, a lot of people were buying in on this run up, right? A ton of people were even buying when AMC was around $60. They were buying thinking that, a lot of people had promised them that AMC was going to explode the next week. And you can't ever, trust any promises about guarantees in the stock market. There is no such thing as a guarantee in the stock market, but a lot of people were buying in here and they're down massively. And the institutions want those people to sell. They want those people to hand back their shares so that they can be in control of these stocks and hold the stocks over the next bull cycle that we're likely to enter, hopefully sometime soon. I mean, a lot of these stocks have just been getting crushed lately. There's no telling exactly when we'll get into a bull cycle. Obviously, there are a lot of fears about inflation, but the institutions, the point of this is that the institutions and the hedge funds do not want, by any means, they do not want retail to be holding all of these stocks, right? They'd rather hold all the assets themselves, let the assets go up in value year after year, and scare retail out. And this is what they typically do. In fact, if you look at this chart of the S&P 500, on average, you can see that the S&P performs pretty well, right? It tends to do pretty good historically. You see a lot of green years, but you also see a lot of red years. And this is what a lot of people don't take into account. They think they see the stock market do good for a year or two, and they think that's how it always is. They think, they see that the average return of the S&P is around 12%, and they assume, oh, well, that just means it'll go up 12% every year. But the real smart money is definitely scaring out investors year after year, right? They're going through bull markets where the S&P goes up 37%, and then they scare out investors, like during the Great Depression, although that was, for other reasons, not necessarily just to scare out investors, but it certainly did have the effect of scaring out a lot of investors, where the S&P is down 28%, 47%, 15% year after year. Then it's up 50%, right? And then you have another little bearish year here. And more recently, we've had really great years in the S&P. 2019 up 28%, up 16% in 2020, up 26% in 2021. We're starting off 2022 a little bearish, down 4.9%. But this is just continuing the cycle of scaring investors out of the markets. And despite the S&P seeming to perform fairly well, it's definitely not been the case, once again, for these smaller market cap stocks. The hedge funds definitely don't want investors maintaining their positions in this. In fact, you can look at the short interest on AMC, and some shorts are actually starting to cover today, right? Down 2% short interest change-wise, down to 19.44%, almost 100 million shares short. Pretty darn close to record highs, I will point out, right? We're pretty darn close to record high short interest for AMC, and it's not by accident, right? The hedge funds do not want investors holding these stocks. They want investors to sell, and unfortunately for investors, it's likely that a lot of retail investors are going to look at the stock market after the past 6 months and just figure it's a big scam where everyone loses money, because that's what happened to them. To a lot of the new investors who just got in, they noticed that their accounts may have ballooned during the earlier part of 2021 and then just got decimated for the rest of the year. And that was probably very discouraging, and it's completely understandable that people are getting scared out of the markets. But I do want to point out that, in my opinion at least, getting scared out of the markets is not the right thing to do over the long term. In fact, if you look at the long term trends, you can see that the markets tend to move up year over year on average by a fairly high percentage, right? The S&P tends to go up around on average 12% per year, and that's not even the highest growth market there is. So there are a bunch of opportunities in the market. Obviously, people have been going through a lot of market pain right now. They've watched their accounts probably get decimated, and that's really unfortunate. But keep in mind, guys, think about the long term. You can't just get scared out of the markets if you want to make money over the course of years and decades. You have to stay strong and hold some stocks that might be moving down in the short term, right? There's always some market manipulation going on, and it's really unfortunate when it affects you directly. But I did want to point out that you can't really think about that too much. You can't think too much about the day-to-day prices of stocks. You just have to focus on the long term if you're a long-term investor who wants to retire fairly wealthy, right? That's the ideal type of investor in the market, someone who's not going to think about it too much. But other than that, guys, I'm not recommending that anyone, do anything with their money. I'm just letting you know my personal opinion on this because I am noticing that a lot of people have been getting scared out of the markets lately. A lot of people have been quitting, just selling their stocks, and you can see it in the charts, right? You can see those charts dropping as people are selling their stocks. And I just wanted to point out that it might be not in their best interest, not necessarily financial advice, just letting you know what I think about it. So other than that, guys, if you enjoyed the video, feel free to subscribe to the channel and like the video. Any support would be much appreciated. And other than that, guys, have a great day. I'll see you in the next one. Bye.